The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Okay, folks, Larry Pesavento for Steve Rhodes. We were talking about the NASDAQ, and you can see here the NASDAQ. Here's the opening, folks. And when you see a bar like this, and it's going through the 382 like this, this is not when you sell a 382. You sell a 382, and it takes many bars to reach that level. Like last night when we were watching this, you'll see from the high that you made right back here, this rallied exactly to the 382, completing the ABCD down here. But when you see these going straight through like this, you can't stand in front of that. Well, you can, but it's not very lucrative, in my opinion. Okay, so that's that. Let's go back to what we were talking about when we were looking at these stock indices, because here is what really is important. Look at the fear-greed index, folks. We've reached the highs that we had way back in October. Now, there was fear on April the 7th, and now we've made new highs up in here. And the most amazing one to me on all this is look how much money these dudes have put in here over the last 4 weeks. They've put in $5 billion here in just the last few weeks, buying on the way up. And where are we now on the fear and greed index? We're up at the high end of the greed level, and that's what we're watching here as we look at this. Now look at the put-call ratio, folks. This is amazing because we, on the put and calls, we have taken out the lows, folks, of 2009, March 5th. That tells you that they're putting in, there's so much complacency out there that it's just truly amazing. There's nobody that wants to buy any calls at all. Everything is, puts. They don't want to buy any puts. They're all buying calls, much like they were all buying puts back in 2009. So whether that means anything, it's just showing you oversold conditions of things that we're watching here. And as I mentioned before, the one to be watching was, of course, to sell the euro up in here. You had a chance to sell that at 21.06 last night. The high so far has been 21.03 overnight, I believe, something like that. But that would have been the sell. You can see it didn't even make higher highs all during the week. Look at that. This thing gapped up and stayed there for 1, 2, 3, 4, 5, 6 days, folks, and didn't go anywhere. That was true of almost all of the indices because they were expanding by 1.27 because of the gaps. And the gaps, tell you where the extra point is going to be. So let's get back. We've got a lot of things to cover. Now, we had some things that we were really interested in doing today. Of course, we've been long the wheat, and that's doing quite nicely. I haven't checked the cattle yet, but we're having a little rally in cattle. And so we're going to take a look at the cattle market. It's bearish, so we need to find a nice bearish pattern in cattle. So we'll just look to see if we find one here today. All right. Now, I haven't looked at it as of yet. There's where we were on Friday. Okay. Now, here's the action. Of course, yes, I remember we were short here. Got stopped out there, missed all that, but that was my fault. I moved the stop down too close. Some people kept the stop working up here above 215, and then, of course, it didn't melt. We've had a nice ABCD pattern here. We've got another one. Now, let's just take a guess here to see if maybe this was the 382 of that move. I haven't checked yet, but we'll check. Oh, we missed it by just a little bit, but we're not very far away. We're about a point away. So what I would do, given the fact that you've had this, this is the Monday action so far today, we still should get to this. If not today, tomorrow, because there's another, as you blow this up a little bit, you see you have another ABCD. Oh, what is this? I got to tell John just a minute. I can't do this right now. I got to turn this off. Hold on just a second. John doesn't realize that I've got an extra shows to do this week. Anyway, this you can see here. There's the area you want to sell it. August cattle at around 208.79. That's a 3.8 on the move down. This is a bearish pattern, folks, for three different reasons. Let me show you the first one. The ABCD pattern is complete. It was 43 trading days up in this, calendar days. and 43 calendar days up into this one, the largest volume ever recorded in feeder cattle and cattle. In other words, everybody went from long to short during that time, and now we're getting a little bit of a pullback here. This is the one, if you want to get short cattle, that's it. So let's look at it closely, all right? There's where you want to get short, right up here at around this 208. I've got to change it because it's went a little bit lower from that level, and that's it. Just 1 second here, and I'll get back to John in just a minute here. Hold on, there's where we are. It's right around 208, right around 28, 209. So that's the place where I would really try to get long, something that we're watching here early this morning. Okay, so let's move on here and take care of a few other things that we want to talk about. We want to move over. Just get this out of the way here. We want to move this over to the, by the way, folks, if we made a new high in the Dow Jones. If we make a new high in the S&P, which is up another 25 points, that means everything that I'm talking about here is wrong. That's pretty much the way you want to look at it. But right now, that's what you want to consider. You've got to do what the charts are telling you, because you don't know what the news is going to be. You know, that's it. Like in the cattle, we didn't know that there was going to be a feeder cattle virus or something coming out of Mexico to make feeder cattle open up 5 points in one day, and that's what took our stop out. Of course, that day, that was the day that it reversed, but that's trading. All right, let's move over here to the Treasury bonds, because this has gotten a lot of play here over the last night because of the thing with Moody's. Now, Moody's, folks, is the largest, I believe. I'm saying something I don't really know. So let's get this up on the daily. We didn't take out the 211. This was the low that we had right back here. That was the exact same low we made right here to the tick. This was a double bottom right here. Now we've had a pretty good, and we held 111. That's exactly what we held. It got to 116, so that is held. Now the news is out. This is basically old news. There was your ABCD. There was your 382. The news came out Friday, and now it's shaking the tree, and it's probably got huge volume here today. Let's just check that just for kicks and giggles. Well, it's too early. This is it's too early in the morning. Anyway, they still have a chance, but bonds overall don't look very good. That's the bottom line. Even if they rally a little bit here, folks, it's not looking like they have a chance. But because there's bad news, okay, and the action is pretty good, because we were down, but now we're up on the day from where we were Friday. We closed at 211.31, and now we're at 212.16. So we had very bad news, and the market's higher. And that's one of the reasons when you see that action like this and it doesn't take this out, that's when the short covering comes in at that point. I would like to check the AI program since we're doing this, and Steve is not here today. See, it was an exact reversal today. So this is an inverted pattern. All we have to do is to take a look at this, and that would have given you a pretty good chance here. If I can get this turned around, all I have to do now is to get this out of the way and invert this, and you'll see there was your bottom in the Treasury bonds right about here, and they've rallied over a full point right up in here. This says the range should be pretty much done for the day, but it's still a little bit early. Okay, we'll be right back, folks. Stay tuned.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Okay, folks, Larry Pesavento for TFNN. Now, John Jameson, my friend over in the Isle of Man, just sent this a little while ago. This shows you the standard deviations. Now, what I'm going to do now, this is the S&P, shows you that the standard deviation for the day was supposed to be right here. Okay, now remember, these option dudes, they don't do this stuff until the market opens. And you can see here when we opened, we were above it. And so you can see we had the big rally that we have going here right now. But what I want to do is I want to show you the importance of this number and how it relates to what we do when we're watching these things here unfolding. So let's get over here and I'll bring it up to you right now. Here is the S&P, what we're looking at right now. If you want to take a look at what the AI is saying, it said we're getting ready to turn down. But let's move over here and just go to a 4-minute chart so we can see where we were last night. Okay, now here's where we were last night. You can see we've had a nice rally. We're right up banging against the 78% level right now as we speak. But here's where we were. You can see we had the big sell-off right here. Then we rallied up to just about the 48% level. And then we came down. Look what the ABCD measured to, folks. 58.90. The low was 58.92. And look what's happened since that time. We've had this huge rally. Now that's related to the fact that these numbers, there's your ABCD measuring it to there right now. But look what happens when you come here. You see these real strong trending things early in the morning. Right when the market opens, you can't fade a 382 like this. You know, if it has a little quiet ranges like that, but when you have really wide bars like this, that's not a good thing to usually do. And when you want to do something, you want to sell the weaker. You don't want to sell the strongest. The strongest has been the Dow Jones, the NASDAQ. The weakest has been the Russell, okay? That's the one that, you know, we recommended being short at 2104. I don't know where it is right now. Somewhere around in here. Let's just check and see. It should be right about there. And we're still below 2100. It hasn't really done very much so far. And of course, we're short from 2104. All right, let's move on to a couple other things that I'm not sure whether Steve follows these or not, but there's one particular trade out here that I think deserves all of our attention. If you like tortillas and bread and stuff like that, the wheat market has had a nice bottom. We caught that last week, but we've got another one coming here in the new crop corn. This is December corn. I'm going to bring this up here on the daily. You can see here we made new lows here on Friday. Hold it. It hasn't updated this as of yet. Let me make sure I get this working here today. And here we're back down again. We're really close, folks. We're really close. Let's just get up here, and I want to show you why I want to be a buyer of corn down in here. Folks, corn has just been planted, okay? It's planted already. Beans are just finishing planting. Well, they're probably finished by now. They won't harvest this stuff until October, late September, early October. We've got all of these ABCDs pattern forming here in the corn at a very low level. Now, unless you think people are going to stop eating bread, pasta, and cookies and stuff like that, and corn on the cob, I don't know how you can miss this one. But here, let's just look at the ABCD here together. And you'll see there's your AB leg, there's your CD leg. We're coming real close to it, folks. We're not very far away. We're only 8 cents away from where the number we wanted to buy at is based on these smaller ABCDs right in here. Because we've already taken this out. All those stops are gone. There's hardly anybody bullish there. We had a rally back here that only went to the 382. So this is the area that we're expanding. So as we watch this, we're going to get that out of the way so we can see it. Now, I don't know the fundamentals from whatever, but anyway, that's what we're watching here right now. Now, let's move over and just do this next little ABCD pattern right here, because there's your ABCD. That one measures down to right about here at 32. You see that? I am buying, as you can see, I put the marker in and raised it up here. I'm buying right there. I'm going to buy at the 1.27 of this whole thing. The reason for that is you had a 1, 2, 3 day rally here. You had a 1, 2, 3, 8, 2 rally here. And if you measure this last one right here, that's going to get you to where you want to buy it. And that's why I'm saying to buy it at 29. We're selling at 34 right now. This is a huge market, folks. Corn. Well, you know that it's the largest crop in the world, and we grow most of it. So that's the main thing. But this is it. We haven't quite taken out the lows. Have we done that yet? No. It was a quarter cent away from taking out the low here. So we're watching that one very, very closely here today. Being a buyer around 429, and our stop has got to be down here. 10 cents would be 419. So that would be stopping right about there. Well, I wouldn't want to go to the 1618 because that's not too bad. That's only 10 cents. Should put your stop at 413. So 27 to 13. To be a farmer, you have to risk $750 here. But frankly, it looks like it's got all the earmarks of doing it. Now, the wheat worked quite nicely, and the IBCs don't always work. You saw what happened in the cattle. It was perfect, except that the news came out and bada bing, bada boom, they banged you around a bit. So got to put that stop in. You just don't know when they're going to hit you. Okay, now let's move on here. We want to talk about the gold market because, folks, it's trying to be bullish, but believe me, it's really having a difficult time. As we mentioned before, I believe that we've made a major high in gold for several years. Here's what we've done so far. Last night, again, you see all we did was we ran up and hit that 382 number again right there at 447. We had a little bit of a pullback here to the 382, but it didn't go through, and then it backed off again. So this 382 right now is holding pretty nicely in the cattle. That's why I put these in here, because the fact that it's held this level again, rallied $20, came down really hard, stopped almost exactly again at the 382, telling it's got some more oomph to the upside. But boy, if we get up here, we're going to be up in a 5-day rally here somewhere between 330, 3310 and 3324 the next couple of days. Watch that real closely, because that's going to be multiple confirmations of these things. And remember, our high was not here. Our high was way back there. So when you see this rally coming right here, okay, that's going to be a 135 pattern. 135. And let's look at the big 382 on the whole thing. And that would take you right up to this level right here. is now that's your first level. That's your first 382 level is at 3275, but this is the one you'd like to see at 3325. That's the number. Let me write that in there so you can see. That's the one. We get above that, gold's got a chance to go a lot higher, because if this is the big ABCD, and remember, it took a long time to get there, folks, and that's the first ABCD we've had in the gold in a long time. That could be very, very bullish. It made it. You can see there was the ABCD move right here. We went a little bit lower and we rallied $100 and some just in a matter of a few days. So it's actually acting like it wants to go a little bit higher here. So that's what we've got to look at. Some stocks here when we come back. I know there's several we have to look at. One was Goldman Sachs, and we've got Google and a few others, but we'll be back here. Let's see what the old clock on the wall says, and we'll see what we have got to go. We'll be right back, folks. 877-927-6648.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, Larry Pesavento for TFNN. I got a slight problem here. You notice here, this is the daily. If you go down to the intraday chart on the corn, you'll see that it actually rallied a little bit here. For some reason, I'm not getting data on Christmas corn on a daily, so I have to figure out with CQG what the problem is. We'll get this out of the way here because we don't really want to worry about that anymore. We want to be talking about some other things. I want to talk about stocks. Now, this one confuses me because I don't do stocks, and it's showing Disney being down this much. And folks, Disney's a Dow stock, and there's no way that the Dow can be where it is with Disney down this much. So those of you that want to tell me later what the problem is, I don't know. Let's do the intraday here. Maybe that'll give us some indication of what's really happening here. And we'll get up here. Yeah, you see it's trading up quite a bit. So I don't know why the data is so bad here. You can see there it is Friday, and it's showing 97. I don't think it's split or anything like that, so that's it. But we did have a position now. This is not Steve's position, but it was our position, and that was in the Goldman Sachs. If you'll remember, we were selling Goldman Sachs on the on the head and shoulders pattern that we had here at 16. Our stop was at 22. The high has only been 20. And change. Okay, so our stop is at 22. Now it's still out $3. Now this is a daily, so I'm going to have to update this, and God only knows where it's going to be. So I'm going to bring this up, and we'll see what is happening right now. Okay, well, it gapped down. You can see it's. Let me refresh this, and hopefully it'll refresh for today. Yeah, well, see, we came down. Well, now it's got a big profit in it. You can see there's we sold it here up here at 16. Stop was up here at 22. It got to 20 and change, and now it's had a nice move in it. All we were doing, folks, was we were looking at the daily chart and looking at the head and shoulders pattern right there. It was lined up perfectly here, and so that's what we're keeping an eye on. Okay, now these, for some reason, this is showing 567. That's totally wrong. All right, let's get this out of the way. And there's another one. Looks, if you like to go against the boys out of Sunnyvale, look at I want you to see the weekly pattern in this one, because this is a really beauty. Here is the, we'll spread this up a little bit like this. This is a head and shoulders pattern in Google, folks. It's a perfectly symmetrical one, just like they say in Andrew Lowe's book. Okay, now there's where you were right here. There's your left shoulder. There's your head. There's your right shoulder. Look at this. There's your 382 retracement that we made right back here. Now I'm showing a price of 167. Let's see what the intraday price would be. We'll bring up this and we'll see where we are. Well, it got up to 170. Would that have broken it? I don't think so, but let's just double check here. On that weekly again, excuse me, give me just double. No, it won't. I can tell you that right now, because 170 is just right back here. Is all it's doing. That's where you wanted to be selling it at, is 170, and that's where it's trading at right now. Anything above 172 in this would tell us that, yeah, that one's not working, and you'd have to invalidate the pattern. But this on a weekly basis is quite bearish, because there's your 382 retracement off of the high. You can see 0.44 is almost exactly 382, so very interesting one here to look on Google. Okay, now we want to do a couple others here. A big one is happening. Hold on one second. The Palo Verdes are coming back in play. Let's move on here and take a quick look here. Let me get this up here, folks. I've got to take care of a business here first. Oh, where is it? Come on. Tesla, because Tesla's really close to a major resistance level. There's the Tesla on the daily. Let's see if now I can't even tell where the price is at. This is why I don't trade stocks, folks. This is Tesla. Let's get the daily up here. Hold on. This is weekly. I want to get a daily chart up. Shut the front door. There it is right there, 51, folks. What was the high today? 51.6. 341 is the number. That's the 50% ABCD, multiple patterns completing ABCD, 51. Now, just for kicks and giggles, we're going to put this on and see where we are. Okay, there's your 251 right here, and we're 249. So as long as we don't get above 353, it's still got a chance to move over in Tesla. Okay, now NVIDIA has been weaker. It was earlier this morning, and I don't have to explain why I don't do stocks. It's I probably should. All right, this is NVIDIA. Oh, this is weekly. Give me a break. Hold on just a second. Get the daily up here. Oh, that's another reason. Well, CQG just doesn't give you. Okay, 35 is, I don't even know if it's up or down right now. Let's look and see here. Okay, there's Friday. We're down just a little bit, because here's where we were on Friday. Yeah, well, it's actually up because it, had this big move down right on the close, so it's basically up a little bit. So that's pretty much it. I don't really see very much to do in those stocks that I'm watching. All right, let's move on to a couple things that I am watching from a longer-term perspective, folks. And one of those is the fact that I've talked about the corn, the fact how bullish I am on corn. I'm already long wheat. That's actually doing pretty well. But what I think we really should start to do, and this is what I'm doing for my customers, is I'm going in and I'm beginning to look at the November soybean contract. This is new crop soybeans. Now, we have not had a crop failure of any stretch of the imagination here for many, 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 many years. I think, you'd have to go back and look. But it's been a long time. See, beans used to trade at $18, $19. Then they came all the way down to $9, and that's where $9, and now we're trading at $10.30. Okay, now I have to do the longer. Let me just show you the longer term picture in beans so you can get a rough idea where we've been and where we could go to. We'll just get the weekly up here just to show you when these things move, they move big time. Okay, now look, this is where we've been for many, many years now. Okay, this is the weeks, okay? There's just the last few years. Remember trading 17, 18 bucks like this? See, this is where beans should be trading to make the farmers make any money, between 12 and 18. Here they make a lot of money. Here they make pretty good money. But look now, see, over the past 2 years, since 24, the last 2 years, 24 and 25, we made higher bottoms. This is telling us that something is happening in the market. So we've got higher bottoms. We had a little bit double top. This took out the top by a little bit, and now we're backing off. Now here we are on May the 19th. Okay, let me explain to you. In 1983, on Memorial Day weekend, the Friday before Memorial Day weekend, it was the 28th. And it came on a Monday, I believe. And we were trading at the Board of Trade. I was a member of the Merck, but I was over visiting a couple people. And we're going to take a break, and we'll be right back, and I'll finish the story.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Oh dear. Larry Pesavento for Steve Rhodes on TFNN, folks. I'm having terrible static here. I hope that it's okay. Evidently, Norm Winsky was supposed to be our guest today, but he must have had some technical problems. So, oh, you know why? Norm's going to be on my show at 1 o'clock. That's the problem. Let's get back to the soybeans. This is July soybeans on the weekly. You can see here's where we are right now. Let's move over to the daily. But what we want to do is I don't want to do July beans. I want to do November. So I'm going to take those off, and we're going to look at the November, because here's where we are in November. Okay, now we had a pretty big sell-off here. Then we had a pretty good rally with the night's trading trade. Straight, folks, if something happens that I'm not around and we get above this level here in November beans, just buy them, because that means they're going to go at least $2 or $3 higher, and your stop would be below whatever these lows are right in here. But this would be a tremendous breakout to the upside. It really would, because you can see the ABCDs measure way above this level. But let's try to see if we can buy something. See, we had a big move down. It didn't go anywhere. It stopped right there. So let's just see why it did that. Okay, now there's what we're doing. There's our April low. Everything in the world bottomed on 7th or 8th of April. There was a major cycle there. Had a lot to do with the tariffs, but it was going to go up no matter what. Now you see here, we're setting almost exactly, we're down 1, 2, 3, 4 days now. We're still at the 382. We've not taken it out. We're 7 cents away. So watch this level closely right here at 1029, 1030. Now we're at 1035 right now, so it could easily go below that. We want to see an ABCD or something, but if we go down here and stay for a few days, just like we did here, it's going to be a really good buy, and that's what I'm watching. I'm trying to get some corn on. I've already got the wheat on, so I think we got a chance here to see if these things are moving pretty good. Now, I noticed that the Dow Jones has, the NASDAQ has just exploded here. I don't know what the problem was. Some kind of news item just happened, because it jumped another 50 or 80 points since we've been on the move here. We better check the Russell. That's still at 2100, not too much away. We're short from 2104. Got to stop working. And I believe the Dow Jones is back up against the high again. Let's just check it right now. Yep, see, we came down. We stopped right here. Let's just look at it. There was your low last night. this is probably a 382 off of that low. Let's just double check. There it was right there. There was your 382 off of the overnight low, which was the 382 off of the low of February. Uh-oh, I've got a problem here, folks, with my energy. I've got to redo this puppy here. Oh, darn it. Nothing else I can do about it. Hold on a second. There we go. And then we'll be okay. Hold on. Just a second. All right. So you can see that's why it's held pretty good. But like I mentioned in the letter, if we close up on the S&P today, now we're up on the NASDAQ. If we get up on the S&P, let's see where the S&P is probably up here. Oh, I think we've done it. Yep. I think this is going to negate the sell signal that I have. And I believe, nope, it hasn't done it yet. It's got to get above this level, but as you can see, it's almost there right now. Now, the Russell isn't very close because, that number is way up here at 2010. Our stop is at 2104, which is at the break even because we had, well over $700 profit in that one time. So we're still playing with these numbers up in here. Really important, folks, if we break through, because that tells us that all of this stuff that I worked on over the weekend that looks so beautiful is not working, and boy, you just can't stand in front of it. So that's all I can tell you. So that's what we're watching here so far this morning. Okay, now let's move on here, and I want to get back to that soybean, November soybeans, because that's where the real money is going to be made, I think, in the coming time. I was going to tell you about what happened in 1983. On that weekend, soybeans had been in a trading range like this, and the market came down on that Friday before the holiday. It came down and made a lower low by 0.5 cent. And we were standing there right outside the pit in the soybeans, and Byron and I and Rick Barnes and a couple other guys that we knew, they were really, really, really bullish. And when they got to that point right here, somebody came in and just started bidding for millions of beans, 300,000 and 400,000 at a time. And folks, they made a lower low, closed almost limit up. And when they came in on Monday, I think they went 3 limits before they really did much off. I mean, it was just a tremendous move to the upside, $20,000-$30,000 move in a matter of into July. And of course, in July, the weather turned bad or turned good for the crops, and bang, down they came. But all during June and half of July, it was really moving higher. So if you get in the right place, just like anything, you can make a pretty good move here. But the thing I'm watching here this morning is now that we've got up to those levels, and we're going to find out whether we've done it. Now, with the NASDAQ, it's not unusual for that to jump like it just did right here, because remember, we're only talking about a few minutes, and that's not hurting anything from the highs back here. As long as we don't take this out, it's okay. But if we take that out, that means that cycle that I was looking at is not working. Now, the Dow Jones took it out by, I think it took it out by 20 points or something. It wasn't very much, but that's mainly because stops are there. So that's pretty much it. Okay, now we'll move over here and talk about crude oil. And you can see here, crude oil has been heading higher. We've been watching this. This is today. Let's move today's action. I want to show it from last night. We're doing an hourly chart showing you that we were at major support at that 786 level. 618 right here. There's your, basically was your 135 pattern here coming in today, right at this level, 6100. We're now quite a bit higher, and we are moving higher. See, we had the 382 here on Friday, then we backed off right here. Now it's just like the weekly chart in soybeans. You had a higher bottom right in here. There's your 135 pattern, and now it's starting to move to the upside. Now, I haven't checked the AI program so far this morning, but I'm going to pull it up and see what it was predicting. Well, it was predicting we were going to be going higher in crude oil until about the time of 12:30, so a half hour after the Steve show, and then I'll be coming back here right about there. So we're going to find out where we're going to be going right now. But you can see we've got multiple ABCD patterns coming in here right now, and if we just measure just a few of these, for kicks and giggles to see where we are, you got your ABCD coming in there, and you got another one coming in right about here, but the time is not right. You want to wait if you believe in the time, and right now, we're trading it. I got another 45 minutes to go to get to this particular high. Now notice here, it didn't make much of a high here, and look at the low. The low was much higher than it was supposed to be, so that's telling this thing is still bullish. So if we look at this on the hourly basis, we want to get a price level, and there it is right there, 62.59, folks. That's going to be just the opposite of that 135. There's your move right here. This is where we should be going here. It's not very far away, 62.59. We're only 20 pips away, and we got a pretty big move into that. So, oh my goodness.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Okay, folks, Larry Pesavento for Steve Rhodes, and I'm sorry, but I've had some type of a static problem here with my mic, and I'm not able to Hold on, I've lost charts too, so just bear with me 1 second, and I'll try to get this up here. But the static that I'm getting is really, really pretty tough. But let's move on here and see where we are, because we're almost at that level here in the crude oil at 62.59. We've got this big move up, but you've got the big three numbers up in here, so you got to be a seller at 62.59. It's in a downtrend. A, B, C, D, Gartley. So you sell at 62.59, put a stop up here at around 62.99, and see what happens. Okay. Now, if you're in the Russell, it's doing okay. The S&P went back and almost made a new high. The Dow Jones almost made a new high. Well, it actually made a high by 10 points. And you can see the Russell, NASDAQ just took out the early morning high, and then it's come down a little bit. So everything's okay. Now, this is why you always want to sell the weakest. The weakest has been the Russell. You can see here, this was stayed here for 7 days, folks, at the 50% retracement of the long-term move. Okay, this is a bear market. Any way you look at this, this is a bear market. There it is. There's your rally back. That's going to be just exactly at the 50% level. I'll be there. It is. Well, just a little above the 50%, but that's really what that is. Of course, with all these gaps in here, these gaps, you don't see any gaps in here, so that will be filled. The question is whether it'll be in our lifetime or not. Getting back to the gold market, one more thing in the gold. We are bearish. I think we're going to get up to 63. Excuse me, let's try it again, Larry. 33.25. I think we'll get there in the next few days, just because this is such an important ABCD bottom. Going below here, folks, if we go below 3,100 in gold, that is going to confirm that we're going to see at least $1,000 break from these highs back here, in my opinion. So live every day in an attitude of gratitude, and may God bless, and I'll see you all at 1 o'clock.